Hello guys, we're gonna go over the charts for the week and we're gonna start off with SPY. So how do we start looking and preparing for the week? We're gonna go to the daily chart. So up here we're gonna change it to the day. You don't have to put that many days, so you can just put a day in a year. So we're looking at the daily chart, okay? Just so we know how the week ended last week. And each candle represents a day. So this was Friday, this was Thursday, Wednesday, and Tuesday. Notice how we are within the same range. We are in an uptrend channel, but still within the same range. So we came up and then just went flat. That's for the day. We went up and then we just went flat. So last week we pretty much did nothing. We went up, down, up, down. That's how we've been doing. Now, when the market is like this, when the market trades like this, your entries are usually at support to the upside, and here you enter to the downside. So if you're playing ping pong like this, so if you come in here, you enter long, here you enter short, as long as it keeps rejecting how it has in the past, and as long as it keeps holding how it has in the past. So that's how you will look at the daily chart. Now let's go down to the 4-hour. Now the 4-hour is a better view for the week. So notice how here in the 4-hour, we were in this downtrend channel, right? Then as we're coming down, we did a lower low, but then here we failed to do a lower low. So instead we did a higher low. We have our low and then a higher low. So when you connect these two, it'll give you this line straight up. Same here. You connect your highs, your most recent highs. Right now, this is your highs, right? But since here we did a higher low, we have a low, higher low, higher low. What you are to expect next is higher highs. So you expect price to hold and then break this high to give you a higher high. And then from here, higher highs, higher low. Here we should have gotten a higher high and we didn't. Instead, we got a double top. So as of right now, this is a double top. Notice how here we came up, top channel, rejected, came back down, bottom channel, tried to pick up, but failed to take out this high. So we did a double top and back down. Now here, notice how we already broke down this up channel. So now that it broke down from the up channel, this is letting you know that bears are in control, meaning sellers. So what are you to expect to happen? Well, we already have this here. Can I give you an example? Right? This is this right here. And then we have been falling. So let's say we have been falling. And then this right here, it's what we have been doing here. So if I were to go from a technical point, this is what I would expect to happen. If you go back to your patterns, this is considered a bear flag. Trending down, bear rally, continue the downtrend. This one should give you a lower low. So let's say this does break out. This, when it comes down, if the sellers have full control, they can bring it down to this low right here. This is what you can see happen. If we go up and reject, this is what you can see happen. Now, your resistance for this week is 415. Okay, 415 is where it has to break. And then once it does, then you have to see what it does here to see if it really wants to go up. But based on my experience, this has to break down. This has to break down, and we should see this play out. This is what I'm going to be watching for this week. This pattern right here. That's what I want to happen. So that's what I'm going to be watching for. Now, if we bounce here at 407, if 407 holds as support and it bounces and we come back up, we must reclaim this channel for the buyers to be in control. So if we come down, if we come down here and then this holds and it comes for the bounce, this is where you want it to reject and then continue down. And that'll be back testing the channel. Broke out, back test, reject, and continue. This is what I'm looking for. This is SPY. Let's go check QQQ. Well, before we go to QQQ, let me go down to the intraday. So that's the 4 hour. Let's go down to the 15-minute. No, let's go down the hour. We're gonna go down the hour. Notice how the hour kind of looks like the 4 hour. You just have more candles, but the range is the same. The range is the same. Now notice here, if I extend this yellow line, that's exactly where it'll be bouncing from. Come here, this is where I expect a rejection. If it does test and then continue down. Notice how here, we touch the top channel, bottom channel, worked our way to the top, back to the bottom, try to work our way back to the top, which should have came to here, but it failed. It failed here, giving us a double top. Double top. So now, once we lose 407, we can continue to drop. 407 is your key support, and 415 is your key resistance. Now, intraday, the 15-minute. If you look at the 15-minute, this is how it looks. So, what are you looking for here? If you're day trading, notice how here we broke out, back tested already, and it's gonna work its way down. So coming in tomorrow, 407. 407 can't hold. We drop to 403. 403 cannot hold. We have 400 here below. So that's what we're gonna be looking for. At least Monday or Tuesday, early week. If we do any pop, this is where we should reject. Just as it's also the channel that you guys saw in the bigger picture. If we get any pop, this is where it's going to reject, because it's the outside channel. We broke out, we have to back test. Reject, continue down, because sellers will be in control. Now I have this zone here, which is my next target. If this area cannot hold, 403, if it cannot hold because there's more sellers than buyers, then you have 400 here below. We could even panic drop to 393. So these are the levels to watch for below if we keep rejecting 415. Now let's go to QQQ. Now QQQ, let's go to the day. Now here for the day, the same thing as SPY. Notice here, came up, rejected. Market didn't know if we wanted to continue up or if we were gonna reject the top channel and come back down. So then we have this day, which is letting you know that sellers were in control this day, but it's still an inside day to this day. Then we have the June 2nd. We have June 2nd, which is Thursday. Now Thursday, buyers came in near support. Notice how we came up, and then this candle. Here we came back down because the sellers, we opened here, sellers took control and brought it back down. The next day we open, buyers come in and bring it back up. But then up here we have sellers waiting and then we gap down. So it's just, right now it's pretty much a war between buyers and sellers. We're still within the range. We haven't done nothing for the week. If you look at the weekly chart, you're going to see how for the week, this is what we have done. A small candle. So the market, it's not clear of where it wants to go. So for this week, what we are looking for is, this is how the day looks. We're looking for a range break. We also have a channel like Spike does. If we go to the 4-hour, notice how in the 4-hour, we broke also from the channel. So if we happen to hold here going into tomorrow, if we happen to hold here, we can do a small pop, probably do a right shoulder to this head and shoulders. So it would look something like this if that were to happen. So this is where it will bounce, right? Come here. You see how it held there? So let's say it comes down here and this is where it holds. We get a little bounce up to here. Notice how this line right here would be the same high as kind of over here, but then this is still high, so it can be considered a head and shoulders if it plays out that way. Higher high, and then we have a lower high. See the head and shoulders, shoulders, head, shoulders. This is your neckline. That's your neckline. Meaning that the moment price breaks below this neckline, that's your entry short. The moment we break down this neckline, that's your entry short. And target these supports below. Now, if there's more sellers than buyers, we can see the lows again. Again, if we get a pop, this is where you should be looking for to see if we form a head and shoulders. That's a bearish signal. Now, if we don't get a head and shoulders, then we should see something like this. Just come straight down. Right? We just break down, back test, and then continue down. So, levels to watch here. 308. Below 308, bears are in control. That means sellers are in control. Below 308, sellers are in control. If for whatever reason the market does trade above it, 315 is your next major resistance. 315 is your next major resistance. Now let's go down to the hour. And this is how it looks in the hour. Notice how we came up to the top channel, came back down, buyer stepped in, sellers came in, buyer stepped in. So it's a war. It's a war here too. Okay? Now, on Monday, you will need to actually wait until price tells you direction. You can't jump in without a clear direction. It's the first day of the week. You got to let the market do what it needs to do to set the direction for the week. Now look, we came to the intraday. For the day trading, you can use the 15-minute as guidance of where the market is going. 15 minutes. Look here. This is where it bounced. Came back down. Buyers came in, sellers, buyers, sellers. Now, this is a level to watch, 303. If we lose 303, Monday or Tuesday, if we lose 303, we can drop to 298. 300, 298. That's at least $8 move. If we drop, right, if this does happen to play out and we get a head and shoulders, get a little pop, head and shoulders, reject somewhere around here, boom, come down, you can short to this area. Now, as long as price stays outside this channel, which is this one right here, right? As long as price stays outside it, we can see continuation down. Now your key level here is 308. 308 should reject if we are going down this week. That's for QQQ. See how we had this downtrend channel? We paused, we went flat. See, we came up, came back down, we came back up, and then eventually broke. And now we're gonna see if we can hold. This is the area to watch. 304, 303 is support. 315 is resistance. This is your midpoint, 308. 308 is your midpoint. So if it rejects 308, you can enter it short. If we break above 308, then you want to make sure it holds above 308 if it's really going to come test 315. But as of right now, 308, 309 is your resistance to watch. We should not get past above it. If we are trending down, we shouldn't get past above it. Let's look at Apple. Now Apple, notice here we have our high. It gave us our high, lower high. And if you extend your line, it brings it here. So notice how here we try to break out, which this will be considered a fake breakout, a trap for the bulls, which is the buyers. Because once this breaks out, it attracts buyers. It attracts breakout traders. This is pretty much letting the traders know we are breaking out of the downtrend and we are going to start to move up. This is the signal that sends to the breakout traders. Now, the only risk that the breakout traders run is that it is a fake breakout and it comes back into the channel like it did here, then eventually come here and back test, right? And reject at this confluence and come down to our next support. It can even possibly come to the bottom channel depending on how strong the sellers are. So this is the low to watch once we lose 138. 132 is our next big support to watch. We are in this channel, so follow the channel. When we're at the top, it usually rejects. When we're at the bottom, it usually bounces. Now, since we're trending down, every bounce, you should look out for a lower high. For a lower high. Now, for Apple, our resistance to watch is 147, which is this right here. This resistance, which is the top channel as well. 147. Below 147, you can short to 143. If 143 does not hold, we can come to 140, 138. Now notice here it says above, bulls are in control. That means that if you see price just hanging around here, right? It'll eventually break out again and the bulls will try to bring it back up. But bulls have to defend 143. If they cannot defend 143 and will fall below it, then that's not good for the bulls and the sellers are in control. Bears are in control. Now, how do I find my levels? Well, if you use Fibonacci levels, which is this right here, Fibonacci retracement, you can go to the 4-hour and 30 days, grab your most recent high and your most recent low, and then you're going to get these levels. Now, all you have to do is know the direction, which the patterns can lead you there, to where the market can bounce and where it can reject. And then you have your Fibonacci levels as target points or as entry points. So for example, Apple drops and it holds this fib right here, which is 140. It drops and it holds the fib 140. Then you can take it along to your next resistance above. And if this breaks up, you have your next fib at 146, right? So you get in the fib here and you take it to your next fib, level to level. Now, if you go to the day, you can also get your levels from the day by seeing where you saw a major reaction. So for example, here, buyers came in, then you would have a trend line here, which is this one. Notice how here it was touched here, it was touched here, it was touched here, here, and here. So a trend line that is touched more than twice is significant. A trend line that is touched more than twice is significant. Look at here. Look at this trend line. That's actually a fib. But look how it automatically placed it here. Look how many times it was touched. See? So finding levels, it's the critical part. It all depends on what the trader is doing. So if you're a swing trader, you're gonna want to get bigger levels from the bigger time frame. If you're a day trader, you want to go to the 4 hour to get your levels. For example, here you can get one. So you have your highs here, right? Lower high, you can add a trend line there. Because we dropped, came back up, and that's the high as it went. So that's your resistance. That's a Y hit. It's coming back down. Try it again. It hit another wall. So you have this line right here. See how you already have the line? Comes back down. Tries again. Hits another wall. So then you make this line here. So every drop that it has, you can add a trend line. You can add one here. You can add one here. Because notice how many times it touches it. You can add one here. You can add one here, here. So it's at major points. So if you get your lower highs, you can draw lines here, here, here. If you have support, you have it at your lows, like here, and this one. And then here, if we happen to hold, then we'll have another support here. So finding support, it all depends on what time frame you are trading. Now, the bigger the time frame, the stronger the support. That's the reason why I get my trend lines from the 4 hour and sometimes the day, depending how the day looks. But for the most part, it comes from the 4 hour. I'll go down to the 1 hour to make sure everything is matching. You see, we have here our highs, our lower highs. So these can be your target points, your trend lines, or you can just use the Fibonacci level. You go to your, you see, 1 hour and 30 days, you still have the same fib. Same high, same low, because you're going back 30 days. Now let's go to Microsoft. Now Microsoft, same thing. It was trending down. We broke out. Now on a downtrend, this will be considered a bear flag. Just like SPY and QQQ has it, this will be considered a bear flag. And for the simple reason that this is exactly how it should play out. This is how this usually plays out. Go down, up, down. Just like I showed you here. Hold on, we go to the 4 hour. Just like I showed you here. Breakdown. Something like this we should see. It's Microsoft. So notice Microsoft, we were trending down. We broke out the downtrend, but we are still making lower highs. High, lower high, double top. Failed. Here we go again. And we failed. Look how many days it's tried. Look how many days it's tried to break 274. So 274, now that you know that it's tried to break 274 for all these days, you already know 274 is a strong resistance. So any rejection at 274 is a good short. Any rejection here at this resistance 274 would be a good short. Your support to lose is 268. Once we lose 268, we can see 263, this bottom wick. So you can put a line right here. You can make that your first target. This wick right here can be your first target. Below here, you have this target right here, 256. It's from Microsoft. Resistance 274. We reject. We can drop to 263, 261. Microsoft. Tesla. Now Tesla, let's look at the day. Tesla was trading within this channel right here. We broke out. This was a fake breakout. Attract buyers. See, fake breakout. Attract buyers. Back in. Try it again. Another fake. And then back in. So here you have buyers that are trapped. These buyers are trapped that were waiting for the move to continue up. And it didn't. It came down. So they eventually had to take a loss. Now, it came back to the bottom channel. Every time it touches the bottom channel, it bounces. Works our way up. Now notice here it bounced. And then it kind of pulled back. It kind of pulled back. But this is a channel that it did on a pullback. So if you look at your patterns, this is a bull flag, a bull continuation flag that usually plays out the way it did. Up, down, boom. And this is how it looks. You got your downtrend channel, right? And then Tesla's been give you a little pop, and then it took a little break. It's taking a little break, a little breather. So when you see something like this, it's letting you know that this could be a continuation up. And that's exactly what we got here. Came up, look at the flag. This is the pole. This is the pole, which is this right here. Look at the flag. This is the flag, and here we have the breakout. This is the breakout. Now, even if you didn't know that this was going to happen, you had a target of at least the top channel. So if you would have gotten in around here, taking it to the top channel, that's a good 88 points. Now, buyers broke the channel again, but this time it managed to actually run. And it ran a little higher, but tested this right here. Still failed to get higher from these two. And here we have sellers pulling in. Then sellers come in. Try it again. Lower high. High, lower high, lower high, lower high. Back down. So lower highs are usually followed by lower lows. So that's why we have this drop. Low, lower low. So what are we looking for in Tesla this week? Well, notice how Tesla was trading within this channel right here. Right? This little, let me make it dark. This gray one. All right, this orange one. And then here we broke out. Notice here we broke out. but then the market got weak. So if I extend this to the right, notice how this bigger channel that we had from the past, this one, if I were to extend it to the right, look what we have here. Confluence. So we have the old channel, right? We have the old channel coming into this price, and then we have this support. So this level here is very, very important. This level is being watched. That's the 710, 700. If buyers fail to defend here, we can drop and eventually test this channel somewhere around here, which is also this low, which is also this support. Now let me cancel this. And if that doesn't hold, we can work our way to the bottom channel. Okay, we can work our way to the bottom channel. If 620 doesn't hold. So for Tesla, if you look at the day, you're watching this level right here. This is your support area. And this is your resistance area. This is where we're at. We're in between. And right now we are in the middle. 4 hour. This is the 4 hour. As long as Tesla stays below 709. As long as Tesla stays below 709, we can see 634 and 617. Possibly drop and make a new low down here. Down here. That's for Tesla. Now let's look at VIX. Now the VIX right now looks unclear right now. It's pretty much in the middle. Notice how we were here, bounce, bounce, then you know strong support, bounce. But here we broke down. This is actually different because we broke down. So if the VIX still stays below this area, which is 25.8, which is a daily 50 SMA, if we hold above the 25.88, if we hold above, the market can sell and the VIX can test the top of this, which is lower highs. But if we reject here at 25.88, we can drop to 22. We can come down to here before we find any support. And if this drop does happen, then the market is going to go up. If that drop does happen, then that means that the market's going to bounce here and work its way up. So let's watch the VIX. Let's see how the market opens. And like I said, it's Monday. Do not be rushed to jump into a trade. Let the first minutes set up. I usually like to wait the first 10 to 15 minutes. Unless I am confident of a move, then I'll get in a little earlier. But I don't recommend it if you are not experienced in trading the faster time frame. That is a fast time frame. Now let's look at Nvidia. So the last one. Nvidia has hard issues breaking this resistance. 204. Tried, failed. Tried, failed, failed. And here we are again. But didn't quite make it. So your level to watch for Nvidia. We also have kind of a bear flag. Your levels to watch for Nvidia would be resistance 200, because this is your high. This would be your stop. 204 is your stop. That means that if it breaks above 204, you cut your loss. But your resistance should be 200. Your support is 286, 288. Below here, you can't take it short to 280, possibly even 162. We can't even make a new low if sellers come in with force. So, same thing. This is the pattern, right? We have this. Look at our flag. Up, down, up, and here we are. So, I'm going to see if we can get something like this. Now, if the market rallies, because what we're seeing is a lot of bearish signals. If the market rallies, because it's too bearish, because it can happen. The market, everybody can be so bearish the market that it rallies and it's short squeezes. Like if everybody's short, it rallies and it's short squeezes because that's a lot of people buying. You need to be careful for that. Make sure the resistance is being rejected before you buy in. Very, very important. So this week, manage your risk. Wait till the market settles on Monday before you enter a trade. Your time frame to watch would be the 3 minute. If you're day trading for the day, so that means you're getting in and out that same day. This is your time frame, the 3 minute. This is the time frame you trade. So notice here we came down, we held this support, we came back up, then we came back down. So pretty much the market didn't know what it wanted to do here. So you get your pre-market high, and then you get your most recent high during trading hours, and then you have this. So then at least you have this trend line that we are trading with, that we are trading under for now until it breaks. And then when it does, look how it comes back and back tests it, but stays outside of it. So if that is the case, then if we hold this low going into Monday, which is right here, if we hold that going into Monday, that means that we may get a pop, and this is where we got to look for a rejection. So have your levels ready. That's just in the 15-minute is where you see where the market is going for the day. The 15-minute. This is for day traders. 15-minute. So you don't get shaken out of a trade. Watch the 3-minute. Watch the 3-minute so you can see how it's playing out. That's all I have. Again, any questions, feel free to message me. And all I can say is make sure you have your levels on your charts. When you have your levels on your charts and price approaches it, it's easier to execute. When you do not have levels on your chart and price gets close to it, you are not sure what is that you want to do or what is that you're trying to do. And then you end up hesitating and you enter either the trade late or you don't enter it at all. So you have to have a plan. If you don't have a plan, you should not be trading.